footing. I want to bring in now Main Street Asset Management, their Chief Investment Officer, Erin Gibbs. And Erin, it's so good seeing you. I haven't seen you in so long. You look amazing, by the way.
Thank you.
I mean, sitting somewhere in the sun counting your money, huh?
It's a happy life.
It's a happy life, but it's been an anxious life for investors,
right?
It
is. It absolutely has been an anxious few days.
I'm glad you're here because you've always been sort of the voice of reason. What's the argument now for the folks like you who are the voices of reason when almost every time, anytime you watch financial media or pick up something, the lead is always something negative, something that's happening bad or that may be bad?
Right. And obviously over this weekend, a lot of it had to do with Middle East conflicts and how do we trade that. It looks like that trade is already over. But I am still very positive on energy, and I was positive on energy before Israel kicked up the notch with Iran. And a lot of the reasons are we're seeing tighter supply. We're seeing oil rig counts down. We're seeing increased demand from India and the Middle East. And so I think right now where energy is priced, both large cap and mid cap stocks, I think those are real opportunities over the next 2 to 3 months.
It's interesting you say that because Tracy Schuchart was on earlier, and her specialty is like energy, and she says it's it's premature to say that the spike last week is already over, even though we're down today, because she's seeing a lot of call buying.
Yeah, and I think with any conflict, it's not over yet. I think we could still see some days where we might see some spikes, up and down moves. I think using the down move on today would actually be another opportunity just to get in a little cheaper. But over the summer and just the next 2 to 3 months where we are with when it comes to where we expect demand to be and where supply is currently, they can't adjust over the next 3 months. It does take them a couple months to ramp up. And so if oil gets up to about 80, that's actually very healthy for those companies. It offers a lot of opportunities for additional exploration. And I think we could hit that. And that's not that much farther than where oil already is.
And to your point, oil was making a bid. It was coming on even before this.
Yep.
What stock do you like in this area?
So I like Weatherford International. It's not one of your big name names. It's a mid cap, but another U.S. based mid cap energy stock, oil services, exploration, part of that support services within the big exploration guys.
It feels like whenever oil gets hot or energy gets hot, people come on. Well, I like Chevron and ExxonMobil because you've got the backdrop of a dividend. You got a fat dividend.
You know me, I always like to find the weird one that nobody's ever heard of.
All right, so speaking of weird, you like home builders, and in an environment where there's a big debate on whether the Fed even cuts this year at all,
right?
Whether mortgage rates will come down at all. So this seems like a very contrarian idea.
It is a little contrarian. I specifically like NVR because it is focused on first-time home buyers, so more the smaller firms. We aren't talking about the Pulte, high-end, 4 bedrooms.
Right.
And so this has really been beaten up. The stock has really taken a hit because those are the home buyers that are more affected by mortgage rates. But I think given where the price is, given how healthy their cash flows are and where they are, this is a great opportunity to buy. This is more of a 12-month play. This is a 12-month investment that I'm looking out.
But you build your position when no one likes it, when the stock is depressed. This is your style. This is your strategy. It's worked for you for a long time. I know it I've seen it firsthand. I can't let you go, though, without asking about the broad market, right? Because this V-shaped rally threw a lot of folks off. A lot of people on Wall Street didn't think it was possible. And then the result, the upward bias. We were marching higher until the news last Thursday.
Right.
And now seems like we're back on that upward bias. How far can we go?
Honestly, not much, particularly when it comes to large caps. Small and mid, absolutely a long way to run because they are just so depressed with these higher interest rates. But large caps, look, we are at pretty high valuations. There's some really extended stocks that are still driven that mega cap momentum. And so I would say it would take a lot for the market to move higher from these points.
Great seeing you. Always great
Derek.
seeing you. Thank you so much.